Also, I have with me Abhishek Varshney, who's the lead for the lending adoption or the adoption by the RBI entities and all the partnerships that we Samati enters into. So he'll also be helping explain some of the concepts. And we have Pranav from our legal counsel, who is our legal counsel. Any points related to DPVP or any legal point of view also can be clarified. If you have any questions, you can ask. Yeah. So quickly moving to what fair use itself is. Fair use framework is, one of the initiative that Samati has taken up based on our role in the ecosystem today. While we also promote adoption of uh, while we also promote the adoption of AA and we work with various stakeholders for the ecosystem, we are also looking at ensuring there is healthy adoption of AA, and AA is used for the reasonable use cases or as intended by the regulators. The spirit of the regulations itself is what we also work with. So we have worked on various codes of conduct and guidelines and best practices for the industry. Fair use is also one of those initiatives by us. And this focuses mainly on ensuring there is reasonable use of the AA itself for various use cases. And the ecosystem has come together to help us frame these guidelines themselves. So, this is a participatory governance initiative, and everything that we discuss from here on is all from the market. We've had experts work with us in the councils, we've had practitioners work with us and tell us from good versus bad, and we've been able to identify the best practice for the industry, and it's an evolving process. Something comes to your mind which has not been addressed and which requires which requires to be addressed by us, please do write to us, and we would want to strengthen the ecosystem in the best way. So look forward to your comments as well. Now, how did this entire fair use framework timeline come about? We work on the principle of define, detect, and deter. How do you say something is a good behavior or bad behavior for an industry? We will be able to do that only if we are able to define good behavior and then identify if somebody is behaving in a good or a bad manner, and then use principles for deterrence of bad behavior and ensure there is only good behavior. To do that, it has taken us considerable amount of time and effort. As you can see the timeline, while AA went live, in 2020, uh, we started focusing our energy into reasonable use in 2023, and from then we've been refining our framework, refining our principles, refining even the process of defining and detection. What started as defining good behavior, then also there was wide spread acceptance, and all the AAs agreed to implement these framework for the benefit of their customer. They saw the benefit from the framework, to ensure that the customer is not there is no misuse of the data of some sort, and there is a reasonable usage of data. So they've agreed to implement this in real time. So what we mean by implementation is real time is they check for fair use templates for every incoming request, both consent request and as well as data request. And this was agreed in May 2025, and we were able to successfully roll this out, where each AA checks the request, all the incoming requests, and ensure that they meet the at least the community agreed standards. Now, these are the roles that each party has agreed to be performing. FIUs in the councils themselves, we have fair use committee and fair use councils. Council consists of nearly somewhere about 50 to 60, REs who are users of the ecosystem of AA framework and have been communicating with us or engaging with us in ensuring there is responsible use of AA. They've agreed to be the implementers. So the core of all the templates are actually to be implemented by the FIUs themselves, and AAs have agreed to be the first level of checkers. So how do we check good behavior, right, or bad behavior? That level of checking AAs have implemented at their level, and FIPs, who are actually the custodians of the data on behalf of the customer, are acting as a second level checking checkers, but it's an optional right now. Not mandatorily, all FIPs are not checking, but AAs, yes, all of them are checking whether the consent templates meet the consent request meet the fair use template. Now, what does a template even mean? Template just means for a given use case, the council members have come together to understand or narrow down the purpose of the use case and set upper bounds, as in maximum what can be the data that can be taken under that use case. Now, a lot of business consideration, technical considerations, and even legal considerations were taken in before arriving at these maximum upper bounds. They are actually not mandatory for every FIU to take the maximum itself. These, what we mean by upper bound is, even if you have a business need, limit yourself to this amount of data collection or these metrics of data collection. And if you don't have that requirement, you can always reduce your data collection to much lower than what the limits are. So the limit is just an upper cap, and it should not be confused to be actually the actual data requirement under each of the use cases. So it's basically formed. Why we call it a community asset is it's was built or it's finalized by the council. The communities have the various cohorts have come together to agree on these guidelines and their reference points. They should not be confused with any kind of legal advice or a compliance check for meeting your own regulatory requirement. If your regulatory requirement doesn't require you to take data from the customer for some reason, please don't take it. Don't assume that the existence of a template in AA framework is in itself a right for a FIU to use that template. That your compliance team will tell you whether you'll be able to use the customer data or access the customer data or not. Yeah, and we are not proposing any kind of mapping of licenses. We don't suggest that this use case has to be used by this license. We have a broader discussion in the council. Like, for example, all these were finalized. Lending, there's no confusion. I would say lending can be done only as per RBI regulations in India. So only those licenses which are allowed to do lending can do these templates. But apart from that, we will not be able to tell you whether your license allows this use case. That again is your domain, your compliance team to answer. Then not all attributes are mandatory. I just mentioned you have to look at what data requirements your team has, whether it is your internal policy model or your own regulations. You'll have to capture, look at all of that, and then arrive at the uh, consent attributes rather than going for the maximum what is given in our templates. Now, what are the three different templates that we are working with? Let's look at that. So far we've had template CT001 for loan underwriting use case, and one for loan monitoring, and the one more for loan collection use case. This is how a template looks. The council will decide on what should be the purpose code. That's the only field that is a uh, mandatory attribute we are suggesting. Rest all are upper bounds, as in if the FI types is deposit, term deposit, recurring, all of this has been given because a loan can be given against any of these information. Loan can be given against securities. Loan can be given against your GST filings. All of these documents can act as an income proof or a cash flow proof or any kind of proof to support the loan underwriting process. For that reason, FI types includes all of them. But if your product doesn't need it, you don't need to take. GST. You only can stick to deposit if you're taking only income proof. Similarly, consent types as well. Profile, summary, transaction are the three sections that you get from the FIP. Profile includes details of the customers, their email IDs, their address, their PAN details, and everything. Summary is your balance as on a particular date, and transaction is all the set of transactions that were done in the given period. Now, all of these three, if you need, please take. If you don't need, you can restrict taking the consent itself to one part of the section, only profile or summary or transaction. This is the upper limit that we've mentioned. And it is from the council, it is good to do all the three. That's a recommendation from their side. But if you want to limit your exposure, it is up to you. It's a one-time consent. It is not that you take a recurring consent to keep on processing different offers or application. That's not how it is. When there is an active loan application, for that you take a consent. And then the maximum date range that you can collect is 14 months. So you have to use this consent within 1 month period, and also purge the data within 1 month. And I once we give this document, you'll be able to click on this. The template along with rationale for each of these fields is given in our website. So you'll be able to, yeah, Pranay.
Yeah, and just to add to Geeta's point on minimizing the data exposure, that is also coming from the DPDP Act, which brings the principle of only collect what is strictly necessary for the purpose. So, so all of these elements in these templates are upper bounds, and I just wanted to re-emphasize that these are upper bounds and not a recommendation in any way. So an individual assessment should be done in terms of what is necessary for the purpose, and that each FIU as a fiduciary will have to independently explain under the DPDP law in terms of whether this data was actually necessary to be collected from the customer. Yeah, so I just wanted to re-emphasize that
Yeah, correct.
data minimization is coming now from the law, and these are not recommendations but upper bounds.
Yeah, correct. Yeah, so this is about the loan underwriting use case for loan monitoring, where there is a need. This again, this use case did come in from the lending institutions, where they do want to monitor the customer for early warning signals and some kind of a risk assessment, and ensuring they have the repayment capability. But this consent is subject to activation, and the customer must be told that only if there is a loan that is active will they be monitored. It's not like they're being monitored on a continuous basis just because they came to ask for a loan or um, things like that. And if you look at it again, the purpose code is fixed at 104, and there are all sorts of FI types, because these are the underlying assets on which the loan might have been underwritten. So when they're monitoring, they're not only monitored for deposit or bank statement, they're also monitored for various other asset classes. So up to the lending institution on what they would like to monitor. It's a periodic consent taken at the beginning of loan activation, and we have given maximum frequency of 5 times per month, because if you look at all the three templates that we have not created templates specific to the product. There could be sachet loans, there could be HFCs, and all of them are covered under this. So let's say there is a weekly loan being given, consumable loans, that some of the sachet loans that we have are weekly. So to accommodate that, we have ensured there is 5 times per month, 4 weeks, and there might be a continuing week in the fifth week in any of the months. For that reason, we've provided for 5 times per month. It's not necessary that you should pull 5 times a month. It is the maximum that is allowed. And the range that you can pull data is for 6 months. When we say 6 months, it doesn't mean that every time you have to keep pulling for 6 months. There is a provision to pull the data for incremental period. So what you can do is for the uh, if you've already taken, let's say, 6 months as of today, and then within a month you're pulling the data again, then it is better to take only the incremental data. That's the 1 month that is elapsed for which you don't have data and you want to take it. So maximum does not, data range here does not mean you should always take 6 months. Please ensure it is you increment it and take only data as necessary. Again, on the validity, it was earlier coterminous, and we had to revise this to 5 years or loan tenure, whichever is lower, for a simple reason that the recall ability of the customer on some of these consents was main concern in terms of the data exposure to the lending institutions. So, based on the feedback in the market, that most of the loans generally, if they are good credits, then the chances of them being repaid within 5 to 7, 8 years is very high, and any kind of default, any kind of change in risk is seen in the beginning 5 years. So, on that basis, it's been taken as 5 years. There are also various considerations of revising this again, and we are have received feedback, so we'll be working on that. But post 5 years, the understanding is if your loan continues to be active, you'll be able to take one more consent for the next 5 years as of today. And what we mean by loan tenure, whichever is lower here, is let's say you have a sachet loan and you yourself are giving it for 1 week or 1 month is the term of the loan. Now, taking a consent for 5 years doesn't make sense for that, right? So it has to be taken as per your product. Now, this we have given it to accommodate all the product types. You please check with your team and then ensure it's well within the reasonable, necessary, as per necessary of that product. And the third use case is about loan collection. This is for the time when you would like to monitor, and the customer is okay for you to monitor their accounts when the payments are overdue. Now, what is payments are overdue, we'll discuss later. But what this particular use case template tries to address is what should be the maximum limit that you should take the data? Do you monitor them every hour because just because he defaulted and you keep checking his balance every hour? Is that reasonable enough? Reasonable? Or do you do it once per day, or do you do it? How frequently do you do it? So here, one per day is a maximum that we've allowed for, and which doesn't mean that you have to keep doing it every day. You might want to check his income history, analyze what is the most probable period in which he's supposed to make the repayment, has some cash flows, and you can use it the day you want to pull the data to check your balance, check their balance. And also, this is limited to only one account. It is not that you can ask for multiple accounts in this. This is because this is focused around the ENACH mandate or ensuring there is a debit presentation. The requirement is to keep only for take consent only for that account. Even if the person has balance in other accounts, your ENACH mandate won't be applicable to those. For that reason, the council has agreed to allow only for one deposit. Any questions that we should take at this point?
I think Gita, let's wait and see if anybody has any questions to these particular templates.
Geeta, Abhishek, there are a few questions in the chat.
Yeah, I can just read it.
Okay, I think Geeta, the first question is, are there any usage guardrails on this? I think he referred to the can a lender use this for creating a PFM use case? So it's talking
Means,
about lenders using PFM
yeah,
as a
we'll
service.
discuss all that. And on SBI performance, they're talking about is will there be limit in the count of five or not? So previously there was no standard definition of what a successful data fetch was, and we are releasing a code soon. So if your consent has five per month and all the five attempts didn't result in data fetch from the FIP to the AA, then that uh, your consent use counter doesn't activate, doesn't get incremented. So basically, you've not got the data. That's where it will stand. Today, that definition is not standardized, because of which you might see these, failures and unable to use it. But we have already finalized the code, and it is in circulation in the FIPs and AAs, and we'll publish it very shortly. So that way, in a month, just because you retry doesn't mean that your consent is used. The consent becomes used only when, or you have 5 frequency, right? How does the frequency count also get incremented every time? It is based on the data that is received from FIP. Previously, we had not had the code for this. We now have. So that should, take care of the concerns you have. And for PFM, we'll go to the next section and we'll look at that. Yeah. So for these three templates, while we do not have any recommendation on when to take the consent, because some of the FIUs found that their legal team was okay for them to take the consent at the very beginning of a journey when the loan offer is being made. And while some of them did not want to take a journey, take the consent for monitoring until after the loan is activated. So we have not commented on it. But if you, for some reason, are taking consent at the very beginning when the offer is being made, along with that, you're taking monitoring and collection consents, then you have to clearly educate. Even otherwise, also, you have to clearly educate. If you look at the purpose text that is recommended, is that you're telling it is subject to activation of a loan. You're monitoring them subject to activation of a loan, and you are monitoring for collections more frequently only when there is an overdue. Now, the expectation is on the FIU to ensure that they're taking care of these in the technical guardrails at their end, in their back end. And when a customer doesn't, accept the offer, or he rejects the, or he prepays the, the loan, or if he has completed his obligations, or whatever obligations under that, then it is compulsory for FIU to show the revoke option to the customer, where he can revoke the consent if the validity is still ongoing. And also, you should inform customers whenever the data is being pulled. This is also on AAs, that they should send regular notifications to the customer. At the same time, it's a good practice for FIUs to also notify them when the data has been pulled. That way, it's more transparent for the customer. And these are the guardrails the council has agreed on. And the one exception they agreed on for short-term loans is, let's say the loan is only 3 months, but then there are high chances of this falls under the bracket of highly unsecured loans, consumables, or PLs, which are of short duration with high risk. In that, they had the council members made a representation that we can't keep the upper bound as the loan tenure itself, because the loan tenure itself was too short to monitor or to ensure collection. So their buffer of 2 months was agreed. Sorry, 3 months was agreed, and even that buffer is subject to a point that loan is still active. So after 3 months, the loan is not being repaid, then the collection use case will kick in, and you continue for the 3 months of the buffer period what you have. But beyond that, please don't continue, taking the consent. Limit yourself. This is only applicable for short-term loans, and what we mean by short-term loan is a loan that is less than 1 year. So this was a representation made, and to ensure we have enough guardrails, we limited the buffer to 3 months. But the 3 months is not again mandatory. It is up to the FIU to decide. And all these points are not recommendations, but upper bounds, and please apply data minimization principles as per the DPDP Act and the rules. Now, coming down to the specifics of why there are three templates and why do we need different consents. So, what we need to understand about consent itself is, if there was a room for a blanket consent and you say that, okay, and start pulling your data, then that itself is not consent. Consent is when the customer is willingly, and there are some 5 words in DPDP Act. They say it has to be clear, affirmative, unambiguous, and I'm missing a couple of words. Clearly uh, says that the consent can be taken only for a specific purpose, and it has to be explicit from the customer. He should not be coerced, tricked into giving those consents. So it's not like a blanket consent for everything that you do, all the products you offer, all the activities that you do, you just take a blanket consent. That's not how consent works. It has to be for a very clear, defined, specific use case. And for that, to ensure all of us are aligned in the AA framework about this, even prior to DPDP rules were released, we had a code of conduct which spoke exclusively on one purpose and one consent principle. So we are requesting all FIUs to ensure their purpose is specified and only consent is taken for that very specific purpose. Avoid expanding the purpose for ambiguous stuff, which the customer doesn't even. When they look at the consent, they should not be wondering whether am I giving the consent for this loan offer, or am I giving it for something else, or it should not be unambiguous at all. It has to be quite clear, and customer must know what are they giving the consent for. So because of this principle, we have split based on different activities of the lender as well as a customer touch point, as well as the reason for data sharing. It all the templates are actually triggers of not what the FIUs want, but the other way around. It is what the customer wants to share. There are different touch points in their interaction with the regulated entities that they will have to share data. And when they are sharing data, rather than a PDF copy or rather than a printed copy, they are sharing the data in digital format. So when they want to share the data, what are those touch points? They are wanting to share the data when they are applying for a loan. So loan underwriting, credit assessment itself becomes a one-time touch point for the customer to interact with the lender and give their uh, uh, data. And similarly, loan monitoring also is an ongoing basis, but there are several points throughout the loan monitoring also. It is like the customer should be able to prove his repayment capability to the lender, right? They should be saying that, okay, I'm still a good customer, my risk still remains same. So this helps him maintain that good track record and maintain that um, uh, 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 what do you call it, risk profile of the customer. And on overdue, the loan collection use case basically is when there is a default and when there is the collection needs to be done. All of this has been done based on the distinct function of the lender as well as the touch point of the customer and the obligations of the customers also. That is what has been taken care of. And if you read the text, it gives you all the different trigger points and where the data is needed, to what extent data is needed. The data you take during the loan underwriting may not be sufficient to monitor or collect, right? And similarly, the data that you take for monitoring, it might give you cues about, his credit profile has improved. Doesn't mean that you have to start offering loans to them. This is only to help you prevent any kind of deterioration in the profile. So it can give you early warning signals, but don't assume that this is the point where customer wants new offers from you. That is not the template for it. So each template has a distinct need, data need, as well as a distinct activity that the customer understands. So we've split that into 3. And how should you, now we are going to the do's and don'ts of the consents. Uh, and we can, yeah, customers are too smart. They will take the loan and revoke the consent before the due is in short term. One point we have to note is entire consent framework itself is consent based. A framework is consent based. What it means is customer can agree to share the data and also revoke his permissions, whatever permissions he is given to the regulated entity. So it's not mandated. And yes, there are chances that they can revoke the consent. And it is also their right that they should be able to remove consent. If they feel that it's not necessary for them to share the data, they will not share the data. And that is the right of the customer. We cannot be denying those rights of the customer itself. And what are the do's and don'ts? Because this template itself speaks of a lot of things. So every time we are in discussion with the regulators, we are in discussion with the regulated entities, we do have all of these questions that are coming to us. So to clarify again, we have listed some do's and don'ts. And if you want to add more to this or want clarity on more to this, please do ask us questions. We'll be able to uh, take it. So far we've discussed the templates. The consents have to be three different, and then each council has agreed on different purpose code for each. Like 103 is for application underwriting, and monitoring and collection fall under 104. Please stick to those purpose codes and ensure that each consent maps to the moves along with the product or the underlying loan cycle, and you don't reuse or use it for some other purposes. And take only if it is possible, please clearly explain to the customer why you're collecting this data in non-technical terms. In some of the journeys that we've seen, if it is for underwriting, then people do show at the very beginning saying that share your income proof. For this, we need bank statement, and that's a good practice. And don't and if possible, if there is a way for you to show different consents that are taken for each of the different loans, please do show it. You all will have a dashboard for loan app, on your apps and on your digital journeys, right? Wherever you're showing the loan, it is good to also show the consent that is linked against it. That way, customer is cognizant of the consent. And need based, please ensure it's based on the needs, and also strictly limit your attributes to the extent what you like. Don't collect anything beyond what is needed. A couple of do's and don'ts for underwriting specifically is take it only when there is a loan application. There's no need to approach the customer for we are trying to make a distinction here about the pre-offers and soliciting customers and all that. AA framework is strictly not for soliciting, and it is where customer is wanting to share data, and it's not the other way around. So this is please ensure you're taking consent for underwriting for an application, and limit the maximum validity to 1 month. In case the what we know is most of these journeys are within a matter of minutes within the same digital journey, but for some loans like HFCs, it is slightly longer, and there is also not a straight through method in which the underwriting is done. In that case, please ensure you don't exceed the consent validity. For some reason, if the data is stale and you have to take a consent again to refresh your analysis, please take a fresh consent. This was agreed in the council that we will not allow underwriting to be a recurring consent. It will be a one-time consent, and any second requirement of the same data for the same customer under the same application will be taken through a different consent. And limit your data types to the information that you need. No need to take GST if you're based, checking for a salaried employee based on the income. If you want to look at his data or his income capacity, uh, based on that, similar to that. If you're giving on equities, please look at equities and not something else. You decide based on your product type and limit the usage to that. And some of these we've already covered for monitoring how to set the tenure and pull the data only needed for your product. Just because there is a risk assessment model and you want to take more data, please don't do that. If it is sufficient to have only one per month, please configure one per month. And in the back end, which is beyond AA network is what you do with the data, right? You have to map each of these consent against different loan application and ensure it is tracked and the life cycle of the consent moves along with the life cycle of the loan. Why we say that is under DPDP, Pranav can come in and help us. You need to be able to provide traceability or auditability of the data being pulled and that being used. So you'll have to build system internally, ensure that you have systems to track this. Yeah, Pranav.
Yeah, so that's absolutely right. In terms of the DPDP Act, what it says is that before each processing activity, you need to check two things. One, is the purpose still valid? And two, is the consent for that purpose still continue to be valid on the date of the processing that you want to do? So that is a continuous thing in terms of maintaining logs of the consent and ensuring that before any time data is processed, you make sure that at that point the consent continues to be valid along with the purpose itself. So that is
Yeah.
something which is uh, 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 coming from the requirements of the DPDP Act itself.
Yeah, and for loan collections, we've told it becomes available only when there is an EMI that is not, it's overdue, and also it is to help you in the recovery actions. Now, loan collection is not a proxy for monitoring, and monitoring at times because you already have the details in case it helps you in your collections, that is considered okay, but collections cannot be a proxy for monitoring. That is one thing that we have to clarify. And in case the loan never defaulted and was paid on time and it was pre-closed or closed on time, then please abandon the collection consent and don't use that at all. So this is on the do's and don'ts of the collection. And for the entire life cycle, one thing we need to make sure is at the beginning of taking the consent itself, we have to ensure that customer knows that the template is available only if the loan is active, and otherwise don't collect it. And similarly, I don't know how am I on time. Yeah. And in case there is a pre-closure of a loan, you do not continue to fetch data under those consents. You also don't, you provide an option for the customer to revoke. You have the end of loan um, documentation process, right? Where you ask them, you release them, and you confirm that the loan is being repaid. You provide an option for revoking of the consent, and also it is good practice to trigger reminders if the customer has not already revoked, and have internal policies such that the data access is stopped immediately after the purpose is exhausted. Each purpose, we know clearly there are three purposes. If the purpose is exhausted, don't access the data. And in data minimization and storage, also extending onto that is notify the customer when the data is accessed. And this is a recommendation when you're accessing data on AA, and also inform them when the data has been purged. Like at your end, they gave a consent for monitoring, but you've exhausted the loan, and then you've stopped pulling data from the customer for that. Now, this is a closed case. You can't be reusing that data for some other purpose, offering new loans somewhere else. No, the customer gave the consent for monitoring until the obligation was existent. Now, the obligation is met from his end. You'll have to stop accessing the data, and you have to move it to archival, move the data out into the archival place where it's required for the regulatory purposes. Let's say your audit needs to look at it, whether you did a proper, your policies were in place or not for handling this entire loan. The audit can access the data, but not the data, the product manager per se, because now the purpose is exhausted and it's moved beyond his purview. And every consent has a data life mentioned in it. Strictly and strictly use the data within the data life. And if the purpose is exhausted before the data life, then stop processing the data. And maintain audit trails of all the data usage. And this is much needed in the DPDP view. You have to maintain records of how the data was accessed, how it was used, and then move to archive and then finally purged, completely deleted, right? Purged doesn't. I'm not even talking about purging for the purpose of the consent, but even the complete deletion in the records because it's exhausted, and even the audit requirement here, 7 years or 8 years as per RBI regulations, even that is exhausted. Then you don't, you need to have a policy in your company to ensure it is done as per the regulations. And don't use data received for one consent. Let's say there was a loan application by the customer in May, and then they gave a consent, you gave an offer, and that journey ended for whatever reason, took it, rejected, or whatever. Again, somewhere in October, he comes again. You don't reuse the data that was collected before. You'll have to ask for a fresh consent, take the data, and use it for your underwriting. That previous data is already moved to the archive now because the action is completed, the entire life cycle of the loan is the interaction with the customer is completed. Don't reuse it for any other purpose. Just move on to the taking the next consent. So these are the basic ones. There are do's and there are don'ts. I think I've covered all of them also. Just in case I've missed out something. Yeah. Uh, One main thing, the last line, what you see here, is that please don't take permission or consent outside of the AA framework that either dilutes, overrides, or bypasses the customer rights under AA. For example, you say the data is collected for underwriting, but somewhere in the beginning of the journey or your terms and conditions or a privacy policy, you say we can use this for marketing and promotional purposes, and then across group something like that language is written. No, that is incorrect. Even a master direction has a clear point that says you cannot override the purpose of the consent that is taken within AA elsewhere. So if they have given it for underwriting, it stops at underwriting. It doesn't go beyond that. If they've given for loan collection and they never defaulted, then you can't be using that consent or that data for anything else. So that's the main don't. Rest all is like don't configure blanket consent that we've seen. They bundle it and they say that this includes all three. That we've anyway covered that it should be separate. That is one. And the main other question that keeps coming to us is why PFM template is separate from lending template. PFM use case as such is a completely different one. Here, the use case is for the overall providing a dashboard service to the customer where there is an incidental recommendation. It is like recommendation on the basis of the financial condition or 360-degree view that the customer gets to see. Based on that, you're making a recommendation. Now, recommendation and offer needs to be discussed. Offer of a loan or a credit is a different journey. That is what underwriting is about. But a recommendation, let's say, you have lifestyle choices of going out to the movies or this thing. Cut your saving, cut your expenses by this much amount. Make these savings. Invest in something. Go for a loan if you have a big expenditure coming up. These are all recommendations. And today there are different licenses who have permission to give recommendation for various things. Those recommendations, we are not saying who can use PFM. We are only leaving it open to those licenses to interpret and check with their regulators if they can use this. But wherever there is a legal requirement for you to collect information of the customer and make recommendations to them, please use it. A recommendation is not an offer. That's the clear distinction of why we want to say PFM template is not for lending template. The use case considered in council, if you look at the use case also, it is wherever there is a fiduciary responsibility, either as a manufacturer or a distributor, and you need to be able to collect their information to make, consider, to provide insights into their finances to help them with their financial planning and such activities. That is where PFM comes in, and it's a repeated service where the customer keeps coming to you for dashboards, insights, and it's an information only kind of a service. It's not binding on the customer, and it is definitely not a place to offer credit or underwrite credit. For underwriting credit, please always take a different consent and ensure that there is a loan application. Again, stressing on the point that A is not for solicitation. So don't assume that just because data is available on AA, you'll be able to solicit the customer with pre-offers and offering credit, etc. So that's the main distinction. Um, Short on time, just couple of points in the journeys. These are actually AA journeys, are the responsibilities of AAs. But since the AAs journeys are embedded into your apps, and there are certain common UI UX points that we need to note. One is to always show all the required uh, consent parameters to the customer for it to be a proper consent. Consent has to be both explicit and informed. So ensure there is a reject button, ensure you're listing out all the details of the consent for them to make a informed choice of whether to approve or reject. And then don't club more than one consent. Like someone comes to you for an with a loan application, a prospect comes to you. Don't assume that he'll accept the loan offer and then also club the monitoring in the same thing. Please honor the one consent, one purpose. And when you're offering more than one, consent in the same screen, when you're asking them to act on it, please ensure they're able to check each of them distinctively. As in, don't give one single checkbox to select all of them. It has to be distinct. The customer should have the option to either accept or reject each consent individually. And this is not for solicitation. Uh, if a customer comes to you for lending, you solicit for PFM later, but not in the AA screen. One of the this is actually a suggestion that came to us, and they checked with us before they went live, and thankfully we were able to tell them that this is not a right implementation. The FIU wanted to, once the loan application or consents are completed on the AA app, on the AA journey itself, they wanted to inform the customer about PFM service that they offer and wanted to take even PFM consent. So AA is only for consent management related activities. It is not for other business activities of other institutions, nor AA can take up business activities. It's written in AA master direction. So please avoid such kind of scenarios in nature. Yeah, this is about it. If you have any questions, we'll happy to take them. No, I don't.
Geeta, I think we have some questions in the chat.
Yeah, but let me stop sharing screen for a minute. Yeah,
So I think we answered about
PFM.
customer having choice to revoke the consent. I think Harish has a question. He says, in some situations, we might not know upfront which mode of data, account statement, GST, IT, or financials, to determine which one would be the best fitment for the loan capacity. The product determination will happen after knowing where the fitment would be. You, the customer holding the existing. What exactly did you mean by loan collection is not a proxy for loan monitoring?
Yeah, loan, we'll take the first one. They don't know the data type beforehand for the product fitment, and that's why they want to take all the data types. Now, is that how you do it in the other journeys also? Like when they come to you for income verification, do you uh, take all the data, or do you how is this done? Is a question.
Harish, if you are here, we'll like
You
to.
can speak
Yeah,
actually.
Yeah.
sure, sure. Thanks, Abhishek. Thanks, Geeta, for the explanation. So when we're an LSP, or even the lender, even the banks that we work with, so typically, especially for a customer who's already has some lending positions, until you see which data the fitment is, which data type where they can fit and give the extra either enhancement or a new loan, they would not be knowing upfront. So they tend to take all the three, and then once studying the case, they determine which data input can give them the extra enhancement or new loan. So they
Yeah,
won't
so
able to determine the
one thing
product upfront.
I understood your question. One thing, Harish, here is LSP is not taking the data. It's finally the FIUs who are taking the data, right? And based on the customer persona, there is they don't know yet whether it is on what basis they are going to do. So if their underwriting policy requires them to check all the three items and then only look at make an offer, it's a part of their underwriting policy, then I think it should be okay. What we are saying is, for example, there is a consumer durable loans, right? For that, you don't need details of your equity or something like that. Na? There are different product
So,
category.
हाँ,
This
गीता
so
वो
this,
डिपेंड कर सकता है basis the lender, but I think what
but
the point you are
but
trying to make is कि
yeah,
if we have 10 15 different data types which are available and which we have mentioned in the template which you can take, but the system and BRE is only equipped to ingest three data points through which you are evaluating the eligibility, then requirement of taking the other data types uh,
is
is not there. Eventually, it is overexposing the customer where the data or the concept which we have in DPDP also, which is minimization, does not hold true here in that case. So just pull those data which are required for underwriting. If the BRE and your systems are equipped to ingest 5 7 data types and you are making out sense out of it, or the eligibility is which you are showing to the customer is getting derived from these data types, it is okay to take.
yeah. Thanks, Abhishek. So my analogy of the product was not correct. Do you have an example of that we can refer to? Like what example he is giving is of a personal loan, is what I'm understanding. And if
So
there is any other product you can refer to, then you can, yeah,
it is typically in the case of a self-employed person.
Hmm.
What
yeah,
we have,
yeah.
that's that situation where what I meant. Personal loan unsecured
The
is a bit different.
sole entrepreneurs who are taking loans, there I think it is, if that's the underwriting policy, then they'll take. Like yeah, Abhishek said, the BRE should be able to accept those data also. आपका policy नहीं है for taking insurance information, let's say. Do you need insurance information to be, underwriting? Just because it's there, and if you look at it, उसमें REIT and WIT सब कुछ है, like all the other. So don't take all of them. Take whatever is kosher. And quickly, the second question: loan collection is not a proxy for loan monitoring, mainly because monitoring is for early warning signals, and by the time loan collection is activated, he is defaulted already. So doesn't mean that you keep monitoring. It's for ENACH debit presentation. अभी अर्ली वार्निंग सिग्नल क्या ही देंगे, ही इज ऑलरेडी डिफॉल्टेड ना. So if the customer is back to repaying the loans, the back to from NPA is moved back to being a regular, uh, making his installment regularly, then you anyway have the monitoring consent to monitor him. But just the loan collection itself can't be considered a proxy for monitoring. There has to be a default for you to monitor the customer.
So, Geeta, I think I remember there were, while we were discussing this in lending council, there were two segment of lenders. One was lenders who wanted don't even one per day after default was too high for them, and they thought that for us maximum frequency could be 4 to 5 a month, and a segment of lenders who were thinking that they want to be restrictive in terms of the consent, even what they are taking. They wanted to stick to monitoring consent. The monitoring consent has two, three major use cases. One is portfolio monitoring, obviously. The second use case is also seeing bank balances and do their presentation accordingly. So that these two broad use case the lenders wanted to take. In case of default, if any lender is more want to do more aggressive collection strategies, they can take one per day. But in collection, you the only the summary data is balances data is available.
अभिषेक, मैं कुछ पूछ सकता हूँ इससे?
हाँ.
लोन डिफॉल्ट, सपोज मैंने एक लोन दिया और लोन मॉनिटरिंग के अंदर मैंने उससे कंसेंट ले लिया जो कि वन टाइम के लिए वैलिड है. अब वन टाइम के बाद क्या हुआ, अब उसकी ड्यू डेट आई, उसने ड्यू डेट डिफॉल्ट कर दिया. अब आप कह रहे हैं कि मैं उसको मॉनिटरिंग के अंदर नहीं ले सकता, डिफॉल्ट के अंदर लूंगा. तो मैं डिफॉल्ट के अंदर उसको रजिस्टर्ड कब कराऊंगा? मुझे
Uh,
मुझे तो पता ही नहीं है कि वो डिफॉल्ट करने वाला है. अगर वो उसने डिफॉल्ट कर दिया तो वो तो मुझे बात ही नहीं करने के लिए रेडी, ना मेरा पैसा देने के लिए रेडी, ना मुझसे कम्युनिकेशन करने के लिए रेडी है, तो मैं उससे कंसेंट कब?
सो विपिन, अभी ना क्या हो रहा है कि लेंडर एट द टाइम ऑफ ऑनबोर्डिंग आर टेकिंग 3 कंसेंट्स। जो ट्रेंड, जो मार्केट प्रैक्टिस निकल के आया ना, एट द टाइम व्हेन यू आर अंडरराइटिंग द कस्टमर
Abhishek,
वेयर।
I'll switch back to English, and also
यस।
I'll address two things. One, sorry to interrupt. One is, it is not market practice. It is, some of the FIUs are okay. They have got a confirmation from their compliance to go ahead and work that way, because in the back end they have enough guardrails to ensure if their offer is rejected or things like that, they can abandon those two consents, right? And they have very strict compliance around it. So their compliance was okay to take all the three consents at the very beginning. And for those whose compliance was not okay, they were taking the monitoring and collection use case at the beginning of the loan activation, where you give the KFS and you have the confirmation. Na? So that we even in that there is a segment, right? Not everybody is doing the beginning only, right?
So
That
correct.
one thing I think we should
Yes,
clarify.
I think so. The placement of the consent during the loan journey depends on how your compliance look at it. Because monitoring and collection will only get activated when disbursement is has happened. So the point which Vipin you are making, that if once customer defaults, you can't take consent, collection consent afterwards, right? This is a point you're taking.
Right.
Asking. So I'm telling that all these consents are taken before disbursement. Like even you have to see you want to take it upfront, or maybe just at the time of signing the KFS and the other you are getting the NACH register, etc. So while customer loan is yet to get disbursed, if the consent is taken, you will have the consent ready in hand when, and you can use it in the cases where customer defaults. So that then you don't need to go to the customer back to get the consent there.
अभिषेक, जैसे हमारा ये जो हमारा ये कंसेंट बेस है, ईनेस भी तो कंसेंट बेस है, वो दोनों हटा देते हैं। वो दोनों हटा रहे हैं, ईनेस भी हटा रहे हैं, ये भी हटा रहे हैं, सब कुछ हटा देते हैं। इवन दो मतलब व्हाट्सएप से भी गायब है, सब जगह से कम्युनिकेशन करने के लिए रेडी ही नहीं है।
Hmm. So I think that is a problem because, but what, matlab we have to live with it. How lenders are looking at it, this is just basis my interaction. I think when the customer goes out and remove or revoke the consent, it is a signal that it might lead to default, or it gives the lender a signal that there is something fishy. They need to check with the customer what is the issue which they are facing, or is there any distress in their portfolio. That only you can identify if that activity is happening. Otherwise, and now this the revocation is happening because of two major reasons. One is, and these are my personal opinions, just but and this is the interaction I've been doing with the lenders. So the two reason of revocation could be the customer knows that the situation is not good, and he may be willful a defaulter, he will revoke it so that the data access get removed. The other thing could be, as a informed customer, many a times even us, well, like if you consider ourselves, we might also not want to give recurring consent to the lenders until unless I am getting benefit out of it. So now lenders have started to distinguish both these customers. Lenders are thinking, and maybe some of them would have started that they want to incentivize customer if the recurring consent is live and being and the customer is not revoking it, he might get extra discount on PF, or he might get maybe lesser ROI, etc. So that is something, the hook you can then it makes you it helps you to identify a customer who is a willful defaulter versus a good customer who is revoking the consent. But I think the situation right now and how the framework has been built, it is focused around customer, and the customer would have full choice of revoking it. So it is, we have to live with it, but to identify default, this is one of the way I told you, you can identify the willful defaulter versus a good customer who's revoking the
Thanks
consent.
everyone who's joined. and listen to us patiently. If you have any questions, please do write into fairuse@samati.org.in. If there is a way you can do it on the website also. You can say contact us, and also there is email ID info at the rate. We have to basically conclude the call in another minute. We have time only until 1:10. So we'll repeat the session again with all the questions that you've asked, and any more insights we get either from the DPDP rules or from the AAs or even the regulators, and we'll try to keep you updated with the latest on these points. Thank you all, and thanks to Abhishek for pitching in with his thoughts. Thanks to Pranav. Thanks to Nikita and Piali for coordinating on every aspect of this campaign and ensuring the webinar is a success. Please do get in touch with us if you have any questions. Thank you all.
Thank you, everyone.